everyone, and welcome back to the channel. Today we're going to know, why is crypto a no-no? Let's get right into it. The incredible rise in the price of cryptocurrencies in recent months has piqued the interest of nearly every investor on the planet. Even the most conservative investors have been exposed to the concept of cryptocurrencies. However, not all investors are interested in investing in it. Warren Buffett, for example, has famously stated that he or his company will not invest in cryptocurrencies through any mechanism. Buffett stated unequivocally that he would not short them or take any position in them. This is because he believes that cryptocurrencies will eventually fail. Number 1. Cryptocurrencies do not generate cash flow. Traditional investors regard a cash outflow as an investment if it generates future cash inflows without requiring the asset to be sold. For example, if a person purchases a house, they can earn income flow in the form of rent without selling the underlying asset. Similarly, if an investor purchases stock in a company, those shares generate cash flow in the form of dividends. When it comes to cryptocurrencies, however, no financial flow is generated. The investor's sole hope for profit is to locate someone ready to pay a greater price for the currency on the market. As a result, Bitcoin investors are subject to market fluctuations. Cryptocurrencies are fundamentally speculative due to the lack of consistent financial flows. The majority of those who own these currencies are speculators looking to make a quick buck. As a result, orthodox investors believe that investing in cryptocurrency is equivalent to investing in the greater fool hypothesis. The only way to make money is to persuade someone to purchase the identical asset at a higher price. Number 2. Cryptocurrencies are not backed by tangible assets. Most conventional investors assume that cryptocurrencies are not excellent investments. However, a sizable portion of them believe that cryptocurrencies do not make good currencies. This is because currencies must have some underlying worth in order to be effective. Traditional currencies such as gold and silver have value because they were regarded as precious metals, and they arose as currencies in practically every corner of the world. Fiat currencies, on the other hand, derive their worth from the government's power. It is illegal to refuse to accept these currencies in the country that issued them. There is, however, no actual object or official order that guarantees the value of cryptocurrencies. Number 3. Cryptocurrencies are prone to hoarding. Another reason why cryptocurrencies are not regarded as ideal representations of cash is their proclivity for hoarding. A currency's job is to remain in circulation. Currencies facilitate the exchange of other products and services. They serve just as a means of transaction and do not reflect value. When it comes to cryptocurrencies, though, investors prefer to stockpile vast sums of them. This is because they assume that the value of these currencies will rise over time. If an investor feels that their currency's worth will treble in a few years, they are unwilling to spend it. As a result, claiming that cryptocurrencies are the currency of the future is incorrect. The manner in which they are being employed suggests that they are being exploited as speculative financial instruments. Number 4. Cryptocurrencies are not stable. The value of all currencies fluctuates. This is because the amount of money in circulation fluctuates in relation to the assets in the economy. Inflation causes the US dollar to lose about 2% of its value on average each year. This is standard for currencies. Cryptocurrencies, on the other hand, take this insecurity to a whole new level. Cryptocurrencies frequently lose 30% of their value in a single weekend. Cryptocurrencies have been extremely volatile in recent years. They have tripled in value, only to fall back down and then rise again. Furthermore, seemingly insignificant events cause the value to fall. For example, when Elon Musk expressed his displeasure with cryptocurrencies, many of them lost 30 to 40% of their value. Because of this extreme level of volatility, cryptocurrencies cannot be considered a viable store of value. Number 5. Den of thieves. The cryptocurrency industry has evolved into a hotbed of illegal activity, with no one holding anyone accountable. You will also not be required to reveal your identity while carrying out a transaction, so you will not know with whom you are entering into a contract. This is a favorite feature of cybercriminals, as it allows them to continue committing crimes undetected. Number 6. Regulation out the window. Cryptocurrency is a decentralized format that can be vulnerable to risks and dangers at any time. People invest in cryptocurrency solely to avoid the transaction fees that financial intermediaries typically charge. There is no governance system, such as SEBI or grievance redressal platform where you can go to seek assistance in the event of an unfortunate event. If you buy something and it doesn't work properly, you can always return it to the retailer to claim your loss. However, this is not the case with cryptocurrency or Bitcoin transactions, and your money has plummeted. Furthermore, in such dire circumstances, you have no one to turn to for assistance. Number 7. Cryptocurrencies are not predictable. Finally, price movements in cryptocurrencies do not follow a predictable pattern. Stocks, for example, appear to have a direct relationship with GDP growth, whereas bonds appear to have an inverse relationship with interest rate growth. When it comes to cryptocurrencies, however, the movements appear completely random. There is no significant relationship between any of the variables. As a result, cryptocurrency investors can't keep track of the fundamentals because they don't know what they are. That's it for today. If you guys enjoyed the video, make sure to hit that like button. Don't forget to subscribe and turn on that notification bell so you never miss out on any future content we'll produce for you guys. We're signing off now, but we'll be sure to catch you all in the next one.